Hi everyone, my name is Henk, and in this video I'm going to be doing a step-by-step process of how I do a quick research on whether or not you should invest in a particular company. Now, this is not going to be as heavily edited video because I want to show you the steps that I take and kind of my thought process as I go through looking through the figures for the particular company. So without further ado, let's get straight into it. The company that I'm going to be looking at here is called Skellerup Holdings Limited. And I can safely say I don't know a lot about the company. And this is where we go through the step-by-step process to find out about the company. So the first thing that I do is I look for the company on Yahoo Finance. Now, the first thing that I would do here is I'm actually going to scroll down and look at the company profile. And here, on Yahoo Finance, they have a description of basically what the company actually does. So if we just kind of browse through this real quickly, Skellerup Holdings manufactures technical polymer and elastomer products for industrial and agricultural applications. So they basically do some rubberware for dairy use, aligners, tubings, milk filters, and they could have some specialized use, which is always a good thing because you want companies that have kind of a barrier of entry. And oftentimes, the more specialized a company is, the higher a barrier of entry it is, so that other companies can't just suddenly go into the sector and just take all their market. Now down here, it also says that they operate in New Zealand, Australia, North America, UK, Ireland, and many other places. So what this is telling me is that this is an international company. And again, this is also a good thing because an international company means that it has a quite a bigger market than a company that simply sells domestically. The last thing that we can see here is they're founded in 1910, which is a very, very long time ago. Again, this to me is a good sign because it shows that the company has kind of a long history and it has managed to survive for quite a long time. So now that we kind of know what the company is about, we can scroll up and find the details for the company. So the first thing that I will look at here is the market cap for the company. So the company has a market cap of $650 million. It gives you a rough estimate of the value of the company itself. So when I'm looking here is I normally would like to go for companies that are more than 200 million in terms of market cap, because I want to be investing in companies that have a decent size and that their share price would not get significantly affected by a couple of big buyers. And it also means that it is easier to buy and sell the particular shares of a company if you ever do need to sell out of your positions. The next thing that I'm going to be looking at is the PE ratio. So they have a PE ratio of 22.5. Now, the PE ratio by itself doesn't actually tell you that much about the company. The only thing that I would do here is use that to compare to the average of companies in New Zealand, which is around 23 in terms of PE ratio. So it's pretty much on par with most other companies in New Zealand. And the next thing we have is earnings per share. So for earnings per share, the only thing that I really look for earnings per share is that it is a positive number, which means that the company is actually still earning a profit. So I don't normally like to invest in companies that are actually losing money. And next thing here is the dividend yield. So for dividend yields, so we can see that this company does pay a dividend. And in terms of dividend yield, normally if I was to look for a company for use as a dividend yield company, I would like them to have at least more than 3% in terms of dividend yield. Now, in this case, Skellerup has a dividend yield of almost 4%, which does mean that it can potentially be used as a dividend company. The next thing that I would do is I would scroll down and look at the financials for the company, which is this box right here. So in this box, the main thing that you want to pay attention to is the green bars and the blue bars. So the green bars denotes the revenue of the company, and the blue bars denote the earnings, which is the revenue minus the taxes and all the different expenditures. And not too worried about the particular figures here at this particular stage. So at this point, I'm just looking for the fact that whether or not the green bars are increasing year by year, which means that they have an increase in revenue year by year. And the second thing that I would look for is whether they have an increase in the blue bar also year by year, which means that they have an increase in earnings year by year. So far, when I'm looking at the company itself, it seems fairly promising. Now, there does seem to be an increase in revenue year by year, which is always a good sign. And there always also seems to be an increase in earnings year by year. The next thing that I want to do here is to look for some of the news on the company itself to see how the company is presented in the news. The way that I look up the news for the company is pretty straightforward. I just search up the company in Google and look for any sort of recent news on the company. So what I want to see here is whether or not there's been news articles coming out that the company has been recording record earnings, or if they have any scandals, or if they have any company that want to acquire them, or all those type of big news. So there's some analysis articles there as well. So it's possible to have a look at some articles such as this. Are they carrying too much debt? And you can go through and kind of see these articles, but don't use like just a simple one article to decide whether or not you want to invest in a company, but just go through a couple of articles if they do pop out. So ideally, I want to look for as recent articles as possible. Now, we do have this article here that says Skellerup is resilient in face of the disease that's been going around. And again, that is a good sign. So the articles are showing that they're definitely performing well despite all the things that have been going around. So here, a month ago, it says Skellerup eyes record net profit in 2021 after a strong start. And this article is from a month ago. So this is something that I would ideally be interested in. So I just kind of scan through this article to see if there's any useful information in here. The next thing that I do is I would go to the actual homepage of Skellerup company to see what kind of products they actually offer. On the homepage of Skellerup, I can see that basically it seems that they are very focused on dairy products and products that has to do with dairy. So what I'm trying to see here is what kind of products that they actually make. So if I go to the products section, so it seems that they make rubberware, tubing, basically all these things that has something to do with dairy farming. And they also have an international section that also use a lot of their products, which again is a very good sign. So they have international products. Okay, so they have rubber and silicone products for the international market. Again, a very good sign. And the third category is footwear. So they basically supply high quality footwear for farming and dairy use. Again, they have quite a few different footwear of these rubber boots for people that are in dairy farming or any of that area. Again, this is all a very good sign that tells me that they have a diverse range of products, and for people that do in the dairy industry, they might be quite interested in using their products. The other thing that I look for on their main website is their investor information. So on here, I believe it will be in their Skellerup Holdings tab. So if I go to their investors area, from here I look up their annual reports. So this is the thing that I'm interested in. Now, a lot of people get kind of scared of these annual reports, and they just think there's a ton of information to go through, which a lot of times I do agree. So let's look at the annual report for 2020 and see if we can quickly kind of just digest the report in a way that makes it a lot easier to understand. So this particular annual report has around 80 or so pages, and I definitely do not read all 80 pages of an annual report like this. Most of the time, I just go straight into the financial sections. So I can quickly see here that on page 10, there is a financial summary, and that's where I go to straight away. So I basically just jump straight to the financial summary and start looking for figures that I might be interested in. So here I have a couple of figures that I'm definitely interested in. One of them is actually total revenue. Revenue is always very important, and we definitely want to see an increase in revenue year by year. So we can see the revenue has, for the most part, steadily increased. And it has increased even this year compared to last year, which with all the shutdowns and everything happening, is actually an extremely good sign that the revenue is still increasing despite the year that we had. The next thing that I look for here is net profit after tax. So this is the earnings that are in the graph on the Yahoo Finance page. So again, I want to see an increase in the net profit after tax year over year. So we can also see that the net profit is also still increasing. Now, the net profit this year compared to last year is very, very similar. But again, this has been a down year for most businesses. So the fact that they're still maintaining their net profit despite a difficult year still shows that it is a really good sign. We can also see here that they have been consistently paying out dividends, which again is a very, very good sign. The next thing that I would do here is I would go up and look for their actual financial section to see if they have any more information that could potentially be interesting. So the thing that I will look for is basically their income statement, which is on page 44. So again, I'm not going to go through all the income statement. I'm just going to pick out the most important bits of it that you may be most interested in. So the most interesting bits is, again, obviously revenue. So you should be able to find the income statement in almost every single annual report that you see. And I wouldn't bother reading all the other stuff in between. So I will focus on revenue. Revenue is really important. And the other thing that are really important is, again, the net profit after tax for the year. So which is this value here. So these are like the two most important figures that I would take from the income statement page. The other important information is the earnings per share. So it just shows you a rough idea of whether or not it is a profitable company. So the company has an earnings per share of around 15 cents. Again, looking for a positive value here. If we scroll down a bit further, we can find the balance sheet. So again, I'm not going to go through every single detail of the balance sheet. I'm just going to focus on the information that I am really interested in. So the two main things that I'm interested in is the total current assets for the company, which is a figure of more than 100 million. So all these in thousands. So it's got that amount of total current assets. And another thing is the total current liability, which I'm just going to compare these two. And it just shows me that they have a ton more total current assets compared to their total current liability, which again, this is a very, very good sign because you want a company that does not just pile themselves up with tons and tons of debt. And in case they get into any trouble, they wouldn't be able to repay their debt. The last important thing here is the cash flow statement. But to me, again, I'm not going to go through all these columns here. But as long as the cash flow is net positive, it's usually a pretty good sign that as long as the company has a net positive cash flow. We can see at the end here, it's got a net positive cash flow. So again, that's a good sign. The next site that I will go to have a look at is called the Stock Nest Monster. And it's just the Loch Ness Monster, but Stock Nest Monster. And on this particular site, they have a lot of news and reports on the Australian exchange and also the New Zealand exchange. So to find a company on the New Zealand exchange, I basically look for Skellerup Holdings in the search bar. So I go to Skellerup Holdings, and here you can see like a couple of listings of the trades that's been done recently and the volumes of trades that's been done. Now, what I normally look for again is the news for the company. So this is where there's generally a list of the important news such as meetings, shareholder meetings, forecasts, and all those things. And a lot of times, important information here are market updates, which we could take a quick look. So for example, the market update, they say have they have done pretty well, and they're looking to forecast record profit in the year 2021. Again, this is a good sign that they're releasing this market update. The next useful information that I normally look for is any sort of presentation. So I can actually do a quick search for presentations. So a lot of times presentation kind of just summarizes a lot of that information into a much easier to read form so that you can go through the information a lot quicker. So basically I look up their most recent presentation report, and we can see that the net profit has been increasing. You know, the share price has been doing pretty well. And during the presentation, basically they go over what they actually do and a lot of the products that they actually have. So a lot of times, instead of reading the full financial report, you can just go through some of these presentations that a lot of these companies do for their shareholders and just get a quick idea of, you know, how the company is doing and what kind of products they actually produce. So for me, investors' presentation is always a pretty good way for you to quickly understand what the company is all about. So after doing all that, we go back to Yahoo Finance page, and this time we're going to look at the statistics for the company. So in the statistics box, when I go down, the main thing that I'm interested in is the return on equity here. So ideally, you want to look for a company that has a high of a return on equity as possible. So here, Skellerup has a 16% return on equity, which means that they are doing reasonably well. Which means that for every dollar that they put into the business, they are basically getting 16 cents back. And again, anything over 20 is extremely well. Anything over 10 is pretty good. But if you have anything less than 10, the company probably isn't doing as good as it could. The next thing that I like to look at is the growth in earnings. So I like to look at the ones that is basically year on year, because to me that shows more of a sign of how the company is doing over the whole year. Because you get a lot of seasonal companies that do well in one particular quarter, such as a lot of the former tourism or traveling companies do well during summer times, and they don't do as well during winter. But obviously that's just all shut down at the moment. So their quarterly earnings, from the figures here, they've been growing by about 8.6%. Again, that's quite a good sign. Next thing that I'm interested in is the current ratio for the company. So current ratio refers to the current assets divided by the current liability, which means that they have 3 times the amount of current assets as compared to their current liability. Again, this is a very good sign that, you know, if push comes to shove, they can always pay off their current liabilities. Next thing that I'm interested here is their dividend yields to see whether this company can be a good dividend stock. So the 5-year average dividend yield is actually really high, because they have more than 5% in terms of 5-year average dividend yield. For the last couple of years, they're around the 3 to 4% mark. Now, this shows me is that this company can potentially be used as a dividend company. So that's something definitely quite important to keep in mind. So that even if this company is not a growth stock, which means that their share price does not increase a giant amount, that could be used as a dividend company. The next thing that I look at is the analysis tab. So on the analysis tab, all the way down here, you can see the growth estimate that some analyst has come up with for the company. So over the next 5 years, analysts are expecting the company to grow by around 9.5% per year. Again, this figure isn't like super high, but again, it's a fairly decent amount. Next thing I want to see is in the holders tab to see whether or not majority of the shares are held by insiders or institutions. So as we can see here, they have around 10% held by insiders and about 11% by institution and another 12% float held by institution. So it's always quite important to have insiders holding shares of the particular company, which means that they still believe in the company themselves. So this doesn't tell you the full story about the company. It just means that, you don't want a company that basically none of the insiders hold shares of the company and they all sell out of the company, or all of their shares are held by institutions. Because if majority of the shares are held by institutions, like institutions could easily manipulate the share price for the company. Now, one thing that you may have noticed here is that I did not pay any attention to the actual share price of the company itself, because before looking through like the earnings and the revenue and whether or not it's a profitable company, I don't actually care too much about the share price. And especially since these days you can purchase partial shares using programs such as platforms such as Sharesies, which if you haven't signed up yet, you can use link below to sign up, get you some free credits, just a plug there. The fact that you can use Sharesies, you can buy partial shares to a particular company. So the price of the shares itself doesn't actually matter as much. So long as you are looking for a good company to invest in. But finally here we want to go and take a look at the charts for the company. So again, I can simply use a Yahoo Finance for looking at the company charts, and I'm just going to change this into a doodle so that I can actually draw some lines here. So this is the last year graph for the last year for Skellerup. So again, we can see that they had a dip around the lows when the lockdown first happened. But then after the lockdown, they have been in a fairly consistent uptrend. And let's see, it seems that they have reached a high recently. And we'll just have a look if it's their all-time high. So yeah, overall, over a long period of time, their shares have been just very, very flat, but they have been performing extremely well after all the lockdown that happened. And again, their share price have reached all-time high within just recently, actually. So this shows to me that overall the share price for the company is doing extremely well, and people are actually interested in the company, and they do want to purchase the company's shares. Now, assuming everything else in this particular company is doing really well, such as the earnings, they have a good increase in earnings, good return on revenue, and the company is growing, and everything is great, and you're actually looking into buying the company itself. So now I want to look at a good price that I can actually buy into the company. I'm not going to be talking so much about trading in this particular analysis, and I'm going to be focused more on the long term. So in terms of long term, when should you actually purchase a particular company? Now, personally, for me, I don't overly like purchasing a company at their all-time high prices, because you want to have a slight wiggle room if possible. Now, if you are looking at the really long term, if you believe this is a good company that will do really well for probably the next 20 or so years, then you don't even need to worry about that. You can just purchase the company shares and not even worry about that. Now, for me, I tend to like a little bit of wiggle room just in case the company has some down points in the near future. So I like to not really purchase a company at all-time high prices, but look for kind of a support area where the company share price can drop to, and then scoop up some shares around that area. So as we can see, currently they are kind of at an all-time high price at this particular stage. So here is where I look at some previous support levels that people have been coming in and looking to purchase the particular company's shares. So if we look at it, they seem to be having a level which around the $3.20 area, which there's been a lot of consolidation and a lot of support. And the other area is around the $3 area, which they have tested that price and then bounced back a bit. And then once it's broken through, it's found more support around the $3 area. So if I were to pick up shares for this company, I would tend to look around either the $3.20 area price or the $3 area price. But again, it's up to you with your investment time frame to see whether or not you actually even want to bother with picking up shares at those prices, because in fact, the share price may simply just keep on going up for quite a while and would take a very long time for that share price to drop down to this particular level, or it may never even drop down to this particular level. So that is something that's all very hard to judge. But it just means that if you are looking for a slight bargain for these prices, those are kind of the price areas that you may be interested in. And that's how I do a quick analysis of a company in a step-by-step manner that you can kind of go through my thought process as I go through doing the research. Be sure to like and subscribe to the channel if you haven't already. If you're new here, you can use the code down below to sign up to Sharesies to start trading companies in New Zealand. And as always, I will see you in the next video. Peace.